And again, with a Roth conversion, it's really important to understand that we still have this now versus later concept going on. There is no reason, here's the key, there is no reason to do a Roth conversion if you think you're going to be more than likely in a lower tax bracket down the road. It really does not make any sense. You want to do it now if you think you're going to be in a higher tax bracket down the road, which is what we're assuming when these tax rates expire in 2025. So now let's say you have that $500,000 in a 401k, and you say, yep, Tony, I want you to do a Roth conversion. What do you all do exactly? How do you all pull this off? We've talked to our tax certified specialist. We look at how much we think we can convert, and then we help you figure out the taxes and how those get paid. But what do? Well, in comes our split IRA concept, all right? And what we're going to do there, it depends on what we might do, but we've got a Charles Schwab account. That would be your stocks, bonds, mutual funds. And then more than likely, we're going to have an annuity over here or possibly multiple annuities. So here's where the expertise comes in. This 401k has to be used for income. You might want to do some gifting strategies. But if we're going to do a Roth conversion, each year that we do one, especially if we spread it out over time, a lot of times we don't do the conversion all in one fell swoop. If we spread that out over time, obviously we're going to have to know how much to pull out, which accounts to pull it out from, and where to convert that from. And remember something too, folks, if we do any conversions, you've also got to think about your income possibilities. The money that's converted cannot be touched and used for 5 years. So again, you have to be really careful converting this and forgetting that you might need additional income. So my thoughts are there's basically 7 key takeaways to this whole thing on the Roth conversion. Let me walk back over here to the monitor. Let's kind of go over those. So basically, you may be sitting there saying, guys, Tony, this sounds great. We got this Roth conversion idea. I'm interested in doing something on this. But what are the key takeaways and the things to keep in mind before committing to a Roth conversion? Number one, assumes that the tax rates will be higher in the future. Again, folks, if we think rates are going to be much lower, it probably makes little sense to do a Roth conversion. Number two, remember the 5-year rule. If you do convert money over to a Roth, that money is kind of locked away. You can't use it for 5 years. It has to stay in the Roth and remain deferred. Number three, Roth conversions will lower RMDs. So for the example we gave earlier, a 70-year-old, if they can do a bunch of Roth conversions, then when they get to age 73, the calculation for the RMD will be much less and hopefully lower the taxes there. Number four, this is tax-free beneficiary stuff at your death, folks. A Roth conversion at death goes tax-free to the kids. That's what concerns me now. These kids, as they get older, if tax rates go up in the future and they inherit all these tax-infested IRAs, they're going to get nailed with that tax tumor. Number five, always use after-tax money for the tax. Number six, this is a good one. Don't give the government your choices meat. I was talking to Aaron and Derek about this. They were like, what do you mean by that? Okay, if I'm going to convert an IRA to a Roth, imagine that a dog's out in your backyard and it's barking and carrying on and you're trying to get rid of it. We'll just say that's Uncle Sam, all right? What are you going to throw that dog? You're going to throw him your choicest T-bone right out of the fridge, beautiful cut of meat. Or let's say you got some old ground chuck over there. It's about half spoiled anyway. I think I would throw them the ground chuck. They're probably going to take it and run anyway. So you want to give them assets that are non-performing, savings, checking, maybe even a brokerage account, an after-tax brokerage account that's down, and you want to just get rid of the thing. That's the bone you want to throw to the IRS. You don't want to throw them the choicest meat. And finally, utilize a full-service retirement planning firm such as Tony Walker Financial. Folks, this is all we do. We're not money managers. We're not annuity peddlers. We're not stockbrokers. We're first and foremost retirement planning specialists. We are fiduciaries. We can handle all of your investments for you. Plus, we do all of these calculations and all this planning at no additional cost to our clients. So take advantage of meeting with us. It's free. All you do is go to TonyWalkerFinancial.com. You're going to click on that little red box, schedule something called the free 10-minute fiduciary phone call, or if you like, you can simply call the number on your screen.
Thanks for watching. We hope you enjoyed that video. If you'd like, check out these other clips. And be sure to hit that like button and that subscribe button for more videos.